Imagine waking up tomorrow and discovering that the US dollar, the currency you've trusted your entire life, is suddenly worth half of what it was yesterday. Sounds impossible, right? Well, three of the world's most powerful nations are quietly preparing for exactly that scenario. And what they're doing with gold right now could reshape the entire global economy. This is something you need to understand before it's too late. Welcome to the Gray Ledger, where we uncover the financial strategies that shape our world. If you're interested in understanding what's really happening with global currencies and gold, make sure to hit that like button right now and subscribe to the channel. Trust me, you'll want to stay informed about what's coming next. Let's talk about something that's been happening in the shadows of international finance. China, Russia, and India have been stockpiling gold at a rate we haven't seen in decades. But this isn't just about having shiny metal in their vaults. This is about strategy. This is about preparation. And this is about a potential shift in global power that most people aren't even aware of. For the past 70 years, the US dollar has been the world's reserve currency. What does that mean exactly? It means that when countries trade with each other, whether it's oil from Saudi Arabia or electronics from Japan, they usually settle those transactions in dollars. It means that central banks around the world hold massive amounts of US dollars as their primary reserve asset. It's been the foundation of American economic power since World War II ended. But here's where things get interesting. China has been buying gold consistently for years now. Month after month, their central bank reports increases in gold reserves. Russia, despite being under heavy sanctions from Western nations, has also been accumulating gold at an aggressive pace. They've actually reduced their holdings of US Treasury bonds while simultaneously increasing their gold reserves. Think about what that signals. And India, with its massive population and growing economy, has a cultural affinity for gold that runs deep, and their central bank has been adding to reserves as well. Now, you might be wondering, why gold? Why now? The answer is both simple and profound. Gold cannot be printed. It cannot be devalued by a central bank decision. It doesn't depend on any government's promise or any economy's performance. Gold is gold. It has been valued by human civilizations for thousands of years, and it will continue to be valued long into the future. These three nations are looking at the global financial system and asking themselves a very important question. What happens if the dollar's dominance ends? What happens if there's a major financial crisis? What happens if geopolitical tensions lead to economic warfare? The answer they've arrived at is simple. Gold provides insurance, gold provides independence, gold provides options. Let me paint you a picture of what could happen. Imagine a scenario where international trade starts shifting away from the dollar. Countries begin settling their transactions in other currencies, or perhaps in a basket of currencies backed by gold. Suddenly, the demand for US dollars decreases. When demand decreases, value decreases. This would have enormous implications for Americans, for the US government's ability to borrow money, and for the entire structure of global finance. Russia has already been pushing for this kind of change. They've been vocal about wanting to reduce dependence on the dollar, especially after facing sanctions that froze some of their dollar-denominated assets. China, as the world's second largest economy, has the economic muscle to potentially create alternative systems. They've been developing the digital yuan, strengthening regional trade agreements, and yes, stockpiling gold as a foundation for potential future monetary systems. India, meanwhile, represents a massive market and a bridge between East and West, and their gold strategy positions them to benefit regardless of which way the global winds blow. Here's something that might surprise you. The amount of gold these countries hold isn't even the most important factor. What matters is the trajectory. What matters is the signal it sends. When major economic powers publicly and consistently increase their gold reserves while reducing their dollar holdings, they're making a statement. They're telling the world that they're preparing for a different kind of future. Now, some experts argue this is all overblown. They say the dollar's position is secure because the US economy is still the world's largest, because American military power guarantees stability, because there's simply no alternative that matches the dollar's liquidity and trustworthiness. And there's truth to those arguments. The dollar isn't going to disappear overnight. But gradual shifts can be just as powerful as sudden ones. Water doesn't erode rock in a day, but given enough time, it can carve canyons. Think about the average American family. Your savings, your retirement accounts, your salary, your mortgage, all denominated in dollars. If the dollar's global position weakens significantly, it affects everything. Imported goods become more expensive. Inflation could accelerate. The government's ability to run deficits becomes more constrained. These aren't abstract economic theories. These are real-world impacts that would touch every aspect of daily life. The Gray Ledger has been following this story because it represents one of the most significant economic undercurrents of our time. It's not flashy. It doesn't make headlines every day. But the accumulation of gold by China, Russia, and India is laying the groundwork for potential massive changes in how the world economy functions. So what should you take away from all this? First, understand that the financial world you've known your entire life isn't guaranteed to stay the same. Second, recognize that major powers are actively preparing for different scenarios. And third, consider what this means for your own financial planning. Diversification has always been wise, but in an era of potential currency shifts, it becomes even more critical. The competition between nations isn't just fought with weapons or words anymore, it's fought with currencies, with commodities, with strategic reserves of assets like gold. China, Russia, and India are playing a long game. They're positioning themselves for a world where American financial dominance might not be absolute. Whether that world actually arrives remains to be seen. But the preparation is real, the strategy is clear, and the implications are enormous. Before we wrap up, I want to hear from you. Do you think the dollar's position as the world's reserve currency is secure, or are we witnessing the beginning of a major shift in global finance? Drop your thoughts in the comments below. And if you found this video valuable, share it with someone who needs to understand what's really happening with the global economy. These are the conversations we need to be having. The world of international finance moves slowly until suddenly it doesn't. And when that sudden moment comes, those who understood the warning signs will be the ones who were prepared. China, Russia, and India are watching. They're preparing. And maybe, just maybe, we should be paying closer attention too. Thanks for watching The Gray Ledger. Until next time, stay informed, stay curious, and stay ahead of the curve.